All right, so we're going deep today.
Oh, yeah.
Into ICICI Lombard,
Deep.
one of India's
Shoot.
top insurance companies.
That's right.
And we've got a really fascinating mix of sources for this one.
We do.
We've got their Q3 2025 earnings report,
Uh-huh.
an investor presentation that they put out,
Yeah.
and even an announcement of like a key new appointment in the company.
It's a really interesting time for them.
Yeah.
So,
I think it's going to be a really fascinating look, not just at where they are financially, but sort of strategically as well.
absolutely. Yeah.
Right.
So we're going to try to understand
Yeah.
what makes them tick.
Just looking at the numbers here.
Yeah.
We want to get into like what their strategies are, what their challenges are.
Right.
And, we even have some information about their commitment to ESG,
Oh, yeah.
which is really
That's a big one these days.
interesting how central that's becoming, the businesses these days, particularly,
Especially in a sector like insurance where
the sector.
managing risk is paramount.
Right.
So,
Yeah, definitely. But before we get into all of that,
okay.
I think maybe we should sort of set the stage.
Yeah. Good idea.
No.
Not everyone listening might be familiar with
Right.
ICICI Lombard or the Indian insurance landscape as a whole.
Okay.
So for those who don't know,
Yeah.
ICICI Lombard is the leading private general insurer in India.
Okay.
And the Indian insurance market is massive.
Oh, wow.
It's actually the 4th largest in Asia
Wow.
and the 15th globally.
15th globally. That's huge.
It is huge. And
Yeah.
here's the thing.
Okay.
It's still massively underpenetrated.
Really?
Like a lot of developed economies
Mhm.
have much higher insurance adoption rates.
So there's a lot of room for growth,
Huge amount of room for growth.
which
My-
makes ICICI Lombard's position even more interesting.
They're operating in this dynamic space with massive potential.
Okay. Well,
Right. Let's get into the numbers then.
All right.
Their press release highlighted a 67.9%
That's a big jump.
year-on-year profit jump
Yeah.
for Q3 of 2025
Mm-hmm.
and a 42.9% increase for the first 9 months.
Yeah.
Those are really impressive gains.
Impressive indeed.
What is driving that kind of performance? What's going on there?
There's a few factors at play here.
Okay.
But I think first we need to look at their
Oh,
gross direct premium income, or GDPI.
Okay.
This is really, the lifeblood of any insurance company.
Right.
And while they did post, that strong profit growth that you were just talking about, their GDPI growth was a bit more moderate.
Okay.
Around 10.3% for the 9 months.
Okay, so
Yeah.
profits are soaring,
Yeah.
but premium growth is
Dipped a little.
more subdued.
What the discrepancy?
So, yeah, why is that?
Yeah.
Well,
What's happening there?
part of it,
Yeah.
I think, is due to a new accounting rule
Okay.
for long-term products
Uh-huh.
that came into effect last year.
Oh, okay.
And it makes year-on-year comparisons a bit tricky for some of these metrics.
Ah, okay.
So it's not
So not a straightforward
apples to apples.
apples to apples comparison.
All right, I got it.
Right. But even considering that, I think the slower GDPI growth does suggest
Okay.
that they're facing some headwinds in certain segments.
Okay. Like what?
So, for example, motor insurance, which is their largest segment,
Right.
saw pretty sluggish growth.
And why is that?
Likely because
Yeah.
there was no change in base premiums for motor TP,
Okay.
which is third-party insurance.
So no price increase means less revenue coming in.
Exactly.
Got it.
But
Okay.
here's where the deep dive gets interesting.
All right.
While motor lagged,
Oh,
their health insurance segment is booming.
wow. Okay.
They're strategically focusing
Okay.
on this high growth area.
Yeah, that makes sense given the increasing demand, particularly their retail health agency vertical.
For health coverage in India, I think
Yeah,
people are just becoming more aware
Yeah.
of the need for health insurance these days.
People are becoming much more aware of,
Right, yeah.
the need for it.
Exactly.
Now, another key factor
Okay.
in their profitability
Mm-hmm.
is their investment performance.
Okay.
They actually achieved a 7.98% realized return for the 9 months. Which is,
I wouldn't have guessed.
Yeah, it was a good return.
Especially considering, the market volatility we're seeing right now.
Right. Yeah. How are they managing that?
Well, it's partly due to something called investment leverage.
Okay.
Insurance companies can use borrowed funds to invest more than their own capital, which magnifies their returns. So even a seemingly modest return
using a larger
pool
investments can translate. They're amplifying
into substantial profit.
their returns.
Right.
Got it. But that also must come with its own risks, right?
It does.
Yeah.
If the investments don't perform well,
Right.
the losses are also magnified.
Okay.
But ICICI Lombard seems to be managing this well.
Okay.
They have a diversified investment portfolio and a really strong solvency ratio.
Okay. And so that means that they have
Meaning they have
a good cushion.
a good cushion to absorb potential losses.
So absorb any losses. Okay. That makes sense. It's a balancing act.
It is.
But speaking of risks,
Okay.
what about those massive events like natural disasters?
Yeah.
Those can really hit an insurer's bottom line.
Of course.
What about those?
Those can be huge.
Yeah.
And this is where ICICI Lombard has a really interesting track record.
Oh, really? Okay.
Historically, they've had a lower proportion of losses from catastrophic events compared to the overall market.
Cool.
So they're perhaps a bit more conservative than their underwriting when it comes to those types of risk.
And it ties into their overall risk management approach, which we can explore that a bit further.
Yeah. But before we get too deep into the nitty-gritty of risk management, I'm curious about something else.
Okay.
You mentioned earlier that ICICI Lombard is not just about profits.
Right.
They have these pillars of strength driving their success.
I did say that.
What exactly are those pillars?
Well, for one, they have an incredibly diverse product portfolio.
Okay.
It's not just motor and health.
Right.
They offer a wide range of insurance products.
So, smart move. Don't put all your eggs in one basket.
Exactly. That's exactly it.
Diversification
is key.
Got it.
Then there's their multi-channel distribution strategy. They have a massive network of individual agents on the ground, but they're also fully embracing digital opportunities, reaching customers online and through their mobile app.
Speaking of their app, their investor presentation highlighted their investments in customer service and technology, particularly this IL Take Care app.
That's right.
What's so special about that?
And so what's going on with that one?
10 million downloads.
Wow.
And they're constantly adding new features.
Okay.
They're using AI to streamline claims processing.
Wow.
And they even have facial recognition for identity verification.
Facial recognition for insurance?
Yeah.
That's pretty cutting edge.
It is.
Wow.
They're really trying to make the customer experience as seamless and as convenient as possible.
Okay, so they're tech-savvy and customer-focused.
Very much so.
What about risk management?
Okay.
How are they ensuring that they can actually pay out claims when things go wrong?
Well, they have a robust
risk management framework and a solvency ratio that is comfortably above the regulatory minimum.
And just to remind our listener, a solvency ratio is essentially a measure of an insurer's financial health.
That's right.
Right.
It indicates their ability to meet their long-term obligations.
Okay.
And ICICI Lombard's high solvency ratio suggests that they're in a really strong position.
Okay. So they're financially sound, tech-savvy, customer-oriented. But what about their commitment to ESG?
That's a good question.
Is it just talk, or are they walking the walk?
That's what I find so interesting about ICICI Lombard.
Okay.
They're not just talking about ESG.
Okay.
They're baking it into their operations.
Okay.
And they've got some
all ears. What are they doing?
really compelling examples to back it up.
Okay.
So on the environmental front, they're migrating their systems to the cloud for energy efficiency, investing in green bonds, and even providing risk management solutions that help their customers reduce their carbon footprint.
So they're thinking about their own impact.
Exactly.
And helping their clients.
Yeah, they're really thinking about both sides of that.
That's great.
Yeah, and on the social side, they're really focused on employee well-being and diversity, and they have some really heartwarming community development programs.
Oh, wow.
Like providing free spectacles for children.
Oh, that's fantastic.
And raising awareness about road safety.
It sounds like they're genuinely trying to make a positive impact beyond just the insurance business.
And when it comes to governance, they have a really robust framework in place, including compliance with ISO standards for risk management and information security.
So they're ticking all the boxes.
Good.
Strong financials.
That seems like it.
Customer focus, tech adoption, and genuine ESG initiatives. But what about leadership? Who's at the helm of this seemingly impressive operation?
Well, that brings us to some pretty interesting news.
Okay.
ICICI Lombard just appointed Mr. Girish Sehgal as a key management person, or KMP, with responsibility for customer experience support and operations.
Interesting. A new leadership role focused on customer experience.
Yeah.
It tells me they're pretty serious about it.
They are.
Tell me a little more about Mr. Segal.
He's got a long and impressive history in the financial sector, particularly with ICICI Bank. He's been involved in everything from wealth management to retail deposits to implementing AI in customer service channels.
Quite a resume.
Yeah.
Wow.
And it makes him perfectly positioned to champion ICICI Lombard's customer-centric and digital-first approach.
It sounds like a strategic hire.
Very much so.
Aligning perfectly with their overall vision,
Yeah.
but with all of this information in mind. What does it all mean for ICICI Lombard's future?
Where do they go from here?
Yeah, where do they go from here?
Well, on the surface, their financial performance is solid.
Okay.
But there's some, subtle signs of slowing growth in certain segments.
Right, and they can't rest on their laurels.
Exactly.
Especially in a dynamic market like India. Right.
Yeah.
They need to stay ahead of the curve.
They need to adapt.
Yeah.
Yeah, and that's where I think their focus on technology and customer experience becomes even more crucial with Mr. Segal at the helm.
Right.
I'm really curious to see how they further leverage technology to enhance customer interactions and streamline their operations.
And considering their commitment to ESG, it begs the question, how will these initiatives shape their long-term growth and brand perception?
That's a great question.
Could their focus on sustainability actually give them like a competitive edge?
It's a trend that we're seeing across industries. And it'll be fascinating to see how it plays out for ICICI Lombard.
Yeah, and it seems like they're really trying to integrate ESG into their DNA.
They're really trying to make it a core part of who they are.
Yeah, which could pay off in terms of attracting investors and customers who value those principles.
Absolutely.
Right.
Yeah.
Okay, but let's not get ahead of ourselves.
Let's not get ahead of ourselves.
We've only just scratched the surface here.
We have. There's so much more to explore.
There's so much more to explore.
Yeah.
We haven't even touched on the specifics of their AI implementation or the real-world impact of their ESG initiatives.
Right. We still need to unpack those.
We do.
And so much more.
So buckle up.
Yeah.
Because we're about to go even deeper into the world of ICICI Lombard.
I'm ready.
All right. Okay. So picking up where we left off.
Let's dig a little deeper into those AI initiatives you mentioned. Their investor presentation really emphasized
one of the
using AI
jumped out at me
to transform how they handle claims.
Yeah, it sounds like they're using AI not just to speed things up, but also to improve like accuracy and efficiency.
It's about improving the whole process, really.
Yes, across the board.
Think about it this way.
Okay.
Imagine you're a customer who's just been in a car accident.
Right.
Instead of dealing with paperwork and long wait times, you can now file a claim directly through their IL Take Care app.
Okay, that's convenient.
Right.
But how does AI actually fit into this?
So their AI algorithms.
Yeah, where does the AI come in?
Can analyze photos that you upload of the damage.
Right.
They can estimate repair costs and even automatically approve straightforward claims, potentially within minutes.
No more waiting on hold.
Exactly.
Or dealing with endless back and forth.
One more hassle.
That's got to be a huge improvement for the customer.
It really streamlines the whole experience.
Yeah.
And it's not just for motor insurance.
Oh, okay.
They're implementing AI across various product lines.
Like what?
So, for instance, in health insurance, they're using it to detect fraudulent claims.
Ah, so it's not just about speed and convenience. It's also about...
It's also about protecting themselves.
And
themselves and their customers from fraud.
From fraud, exactly.
Smart move.
Very smart.
Okay.
It frees up their human employees to focus on those more complex cases that require personal attention.
That makes sense.
But that's not all.
Okay, what else?
They also mention using what they call cognitive computing.
Cognitive computing.
To personalize policy recommendations. And even anticipate customer needs. Insurance that can think for itself.
Well, not quite.
Okay.
But by analyzing massive amounts of customer data, their systems can identify patterns and offer policies tailored to...
It's like Netflix.
Individual needs and risk profiles.
For insurance.
That's a good analogy.
The algorithms figure out what you need.
Yeah. before you even know it.
From that one-size-fits-all approach to something far more personalized and proactive.
I have to admit, that's pretty impressive.
It is.
But this focus on technology makes me wonder about something.
All right.
We talked earlier about their multi-channel distribution strategy with both agents and digital platforms.
Right.
How do they make sure that those different channels...
That's a good question, because it is a challenge...
work together smoothly.
To manage those different channels.
Yeah.
It's all about integration.
Okay.
Let's say you start researching insurance policies on their website.
Right. But then you have a specific question. And you decide to call customer support.
And I'm dreading having to explain everything all over again.
That's where their integrated system really shines.
To the agent.
The agent can actually see your browsing history. And pick up right where you left off.
So no need to repeat yourself.
No need to repeat yourself, exactly. So they're not just offering multiple ways to interact.
Right.
They're making sure that those interactions are seamless.
Okay.
Regardless of which channel you choose.
Okay, so they're not just offering multiple ways to interact.
Yeah.
They're making sure that those interactions...
And this level of integration...
were seamless.
...wouldn't be possible without significant investment in their digital infrastructure.
Got it. But technology is only part of the equation.
Right.
What about the people on the other end of those interactions?
Yeah.
Are they investing in their employees as well?
That's a valid question.
To make sure that they can deliver...
And it seems like they're very aware...
customer-centric vision.
...of that human element.
Okay.
Their investor presentation highlighted their commitment to employee well-being.
Right.
Diversity and skill development.
So it's not just about the fancy algorithms. It's about empowering...
Empowering their employees as well.
Their employees as well.
Exactly.
Okay.
They even have what they call a digital arm.
A digital arm.
Dedicated to fostering innovation within the company.
Sounds intriguing.
Yeah.
What exactly does that entail?
And tech-savvy individuals who are constantly experimenting with new ideas.
They're not just adopting existing technology.
Boundary of what's possible in insurance.
Their own solutions.
Exactly.
That's forward thinking.
It is. And it's essential in such a rapidly evolving industry.
Right.
But let's shift gears a bit and circle back to their ESG initiatives.
Okay.
We briefly touched on some examples, but I'd love to dive.
Yes, let's do that.
A little deeper.
I was particularly intrigued
into the impact they're having?
By their environmental efforts.
Okay.
They talked about cloud migration for energy efficiency, but what other steps are they taking?
Well, they've gone quite comprehensive in their approach.
They reduce their carbon footprint.
They're promoting paperless processes.
Okay.
Investing in renewable energy.
Okay.
And even implementing virtual inspections.
Virtual inspections?
Yeah.
How does that work?
Instead of sending an inspector to physically assess a property or a vehicle, they can now gather the necessary information remotely.
Okay.
Using video calls and drones.
Not only environmentally friendly, but probably saves them time and money as well.
Win-win.
Win-win.
And they're not stopping there.
Okay.
They're also developing risk management solutions that help their clients reduce their own
They're just talking the
climate-related risks.
They're walking the walk.
Exactly.
They're helping others do the same.
They're really trying to make a difference.
Yeah. That's really impressive.
Yeah.
But what about their social impact?
Okay.
We briefly mentioned their community development programs.
Yeah.
But I'd love to hear more.
One program that stands out
How about those?
is their Caring Hands initiative.
Oh, okay.
Which provides free spectacles for children with poor vision.
It's heartwarming
to
see a company using its resources to address.
And it's not just about charity either.
Such important social issues.
These efforts align with their business goals as well.
Oh, okay. How so?
By promoting road safety, for example.
Right.
They're also reducing the likelihood of accidents and insurance claims.
So doing good actually makes good business sense.
It's a virtuous cycle.
In the long run. Okay, but what about their governance practices? How are they ensuring transparency and ethical conduct?
They have a very robust governance framework.
Okay.
Including a dedicated CSR and sustainability board committee that oversees their ESG initiatives.
So it's not just a side project, it's built into...
It's built into their leadership structure.
Their leadership structure.
And they've also obtained ISO certification.
ISO certification.
For information security.
Those are no joke.
And cloud security.
It sounds like they're taking data privacy
demonstrating their commitment
and security
very seriously.
They do data protection and ethical data management.
Okay, so they're not just talking about ethical behavior.
Right.
They've codified it.
They've codified it and made it part of their...
And made it part of their company culture?
Company culture, exactly.
That's reassuring.
Yeah.
But let's shift gears again and delve back into their financials.
All right.
There's one concept I'm still not entirely clear on. Which one?
Investment leverage.
Investment leverage. Okay.
Can you break that down for me again?
Of course.
Maybe with an example.
So imagine you have 100 rupees to invest.
Yeah.
And you expect to earn a 10% return.
Okay.
That means you'd make 10 rupees in profit.
Simple enough.
Now imagine you borrow another 100 rupees.
Okay.
And invest that as well.
Correct.
You now have 200 rupees invested. And with the same 10% return, you'd earn 20 rupees in profit.
Ah, I see. So by borrowing money.
Exactly.
Invest.
That's the basic idea.
Potentially.
Doubling your potential profits.
Right.
Okay.
Insurance companies like ICICI Lombard.
Got it.
Do this on a much larger scale.
Okay.
Their investor presentation showed an investment leverage of 3.76x.
Wow. That's a significant multiplier.
Meaning they're investing in an additional 3.76 rupees.
Even small changes in their investment return
of borrowed funds can have a big impact on their bottom line.
For every rupee of their own capital.
Exactly. And that's why understanding investment leverage is key when analyzing an insurance company's profitability.
It's not just about the raw returns.
It's not just about the raw returns.
It's like how effectively they're leveraging
borrowed funds.
To enhance those returns.
Yeah. But as you mentioned earlier, this also increases the risk if those investments don't perform well.
It's a calculated risk.
Right.
But ICICI Lombard seems to be managing this well.
Okay.
With that diversified investment portfolio and the strong solvency ratio.
Okay, that makes sense. It's all about balancing risk and reward.
Yeah.
But let's talk about the risks associated with their core insurance business.
All right.
They mention having a lower proportion of losses from catastrophic events compared to the overall market. Right.
How do they manage that?
Well, it seems like a combination of factors is at play here.
Okay.
They have a very sophisticated risk assessment process, carefully selecting the risks that they underwrite.
So they're not just insuring anything and everything that comes their way.
Exactly.
Okay.
They're being selective, focusing on areas where they have a strong understanding of the risks involved.
So they're using data to make smarter decisions.
Right. They're also leveraging data analytics to identify and mitigate potential risks.
Unnecessary risks.
Yeah. By analyzing past claims data and other relevant information, they can develop models that predict the likelihood of future claims and adjust their pricing and underwriting accordingly.
So it's like they're trying to stay one step ahead of the game?
They're trying to be proactive?
Yeah.
But what about those external factors?
What about the things that are
completely beyond their control? Just out of their hands.
Like natural disasters.
Right. Natural disasters.
How do they mitigate
those risks? Well, in addition to their careful risk selection, they have a very robust reinsurance program in place.
Okay. And just to remind our listener, reinsurance is essentially insurance.
That's right.
For insurance companies.
It's insurance for insurance companies.
Right.
They transfer some of their risk.
So they're not shouldering all the risk themselves.
For some other insurers.
They're sharing it with other players.
Which helps them spread the burden
in
case of a major event.
Okay.
And they've historically maintained a very conservative level of catastrophe protection.
Okay.
Meaning...
So they're doing everything they can.
They have sufficient reserves to cover potential losses from catastrophic events.
Those risks.
Right.
Both through their own actions and by partnering with others.
It's a multi-layered approach.
It sounds like they're taking a really proactive
and comprehensive approach.
And this approach is reflected in their strong solvency ratio, which indicates that they're well prepared to withstand unexpected shocks.
It's reassuring to hear that they're taking such a,
it is
proactive and comprehensive approach to risk management.
Yeah.
But let's zoom out a bit and talk about the bigger picture.
Right.
What are some of the key trends and challenges facing the insurance industry in India?
Well, one of the most significant trends
what's going on?
is this rapid adoption of technology, as we've already seen. So the
insurance industry is undergoing...
Customers are demanding more online services, faster claims processing, and personalized experiences.
How many other sectors?
So the insurance industry is absolutely undergoing a digital transformation.
Yeah, and this is pushing insurers...
to
adapt and invest heavily.
In
technology to remain competitive.
Right. Another key trend.
Yeah, what else?
Is this growing awareness of climate change.
Okay.
And its potential impact.
Right. As we see more extreme weather events, insurance companies are going to face increased claims and losses.
That's a huge challenge.
Yeah, that's a huge challenge.
It is. And insurers are now factoring climate risk assessments.
Okay.
Into their underwriting and investment decisions.
So they're not just reacting to climate change. They're playing a role in addressing it.
Exactly. And this highlights how closely intertwined ESG factors are with the insurance business. Insurers have a vested interest.
It makes sense. It's not just about doing good.
In promoting sustainable practices.
It's about protecting their own business interests.
And mitigating environmental and social risks.
In the long run.
Exactly.
But what about some of the other challenges facing the industry? Other challenges
they need to overcome.
One of the biggest challenges.
Yeah, what are they up against?
Is the low insurance penetration in India.
Okay, so there's a huge...
Despite being a large and growing market.
Untapped market.
A lot of people and businesses.
But convincing people to buy insurance is a major hurdle.
Still don't have insurance.
Right.
So it requires educating consumers about the benefits of insurance.
Yeah, and I imagine the competition...
And making it more accessible and affordable...
is pretty fierce as well.
Oh, it is. With the entry of new players and the growth of online platforms, insurers are facing immense pressure.
So they can't just rely on their brand name.
To innovate and stand out from the crowd?
Or existing customer base they need to constantly evolve and offer.
It requires agility,
a
strong customer focus,
value propositions,
and a willingness to embrace
new technologies and business models.
It sounds like the Indian insurance industry is at a crossroads with both exciting opportunities.
It's a really dynamic space.
And significant challenges on the horizon.
Yeah.
Okay, so we've covered a lot of ground here. From ICICI Lombard's specific initiatives to the broader trends shaping the Indian insurance market.
We've gone from the micro to the macro.
What are some key takeaways?
Yeah, what can we learn from all this?
For our listener.
Well, I think the key takeaway is that ICICI Lombard...
Yeah, what should they be taking away?
...is not just an insurance company.
Right.
It's a company that's embracing technology, customer centricity, and ESG principles to create a more sustainable and impactful business.
They're not just selling policies. They're using their platform to...
really trying to make a
positive difference.
A positive difference.
But I feel like we've only just begun.
We have to explore.
Still so much more to uncover. The possibilities, right? And that's what we'll do next.
That's what we'll do.
So we've talked about how ICICI Lombard is using AI and data to improve their operations and customer experience.
Right. But what's really exciting, I think, is where this could lead in the future.
Yeah, I know their investor presentation hinted at some pretty mind-blowing possibilities.
They did. Remember how we talked about AI being used for claims processing? Well, imagine taking that a step further. What if they could use AI to predict and prevent risks before they even happen?
Now that would be game-changing.
Yeah, think about it. They could analyze all sorts of data. Like customer demographics, lifestyle choices, even things like weather patterns and local crime statistics.
So instead of just reacting to accidents or illnesses, they could actually help prevent them.
They could create personalized risk profiles for customers. And offer proactive advice on how to mitigate those risks.
So it's almost like...
Maybe even partner with wearable tech companies.
Taking insurance.
To gather real-time health data.
From a reactive model to a proactive.
And provide personalized wellness recommendations through their app.
Almost health coaching type of service.
That's a great way to put it.
Okay.
And it ties into their ESG goals as well.
Right.
Healthier, safer customers mean fewer claims and a more sustainable business for everyone.
Speaking of ESG, that's something I wanted to touch on.
Okay.
It's clearly a priority for ICICI Lombard, but how can they really leverage it to differentiate themselves in the market?
Good question.
It seems like every company is talking about ESG these days.
They are. But ICICI Lombard could take it a step further.
Okay, how?
Imagine if they created